Hi there. These days you would have heard a term called digital gold come back in conversation, or rather appear newly in conversation quite repeatedly. This is a time when we're looking at the coronavirus fears spreading across financial markets, irrespective of asset class, and in times like these, gold anyway does well. So to understand what is this phenomenon of digital gold, today I have with me Gaurav of Kuvera. Gaurav, thank you very much for joining in.
Thanks for having me.
I think it's only in the last 7-8 months, or maybe the last 1 year, that I've been constantly hearing this term digital gold. Now, a lot of people would be perhaps looking at gold as an investment as well. It's done really well. What is digital gold, and why should I look at this when I already have gold ETFs or funds?
Right. So there's some issues that happen with gold ETFs or gold funds. So digital gold is another way where you can invest in gold as a financial asset. Right, and you said it rightly. What happened in the past 5 years? If you look at it, what had happened for 3 to 4 years, gold didn't do much. It was just a hedge against USD INR, right? So if INR depreciated, gold in India would go up. But then last 5 to 6 months, has done very, very well. And historically, we have seen that in bad times, gold does very, very well. Digital gold is a way to have a digitized financial asset, but you are actually owning real physical gold. It's just that the gold is not with you in your home or in your locker. So think of it like this. You buy gold, that's when the journey starts, right? You have to pay making charges, you have to pay a lot of those things to the jeweler, but then you have to also spend for the security, for keeping
You'll put it in your bank locker or whatever,
Exactly, right? So digital gold, what they do is they say, okay, there is a company that buys the gold on your behalf, keeps it in a locker which is owned by all the units of gold are owned there, kept there. And you get the digital equivalent of that ownership. So it's like an ownership certificate that say I buy 10 grams of gold, then 10 grams of gold on my behalf has been bought and kept in that locker. You can take physical delivery of it if you want to. But then again, all the rules of physical gold will apply. You will have to pay the making charges and so on and so forth.
So I already have so many questions. First and foremost, who are these entities? I did some reading. So there's this entity called MMTC PAMP. Who are the entities who are doing this buying? And where are these lockers? I'd want to know where my gold is getting stored, if it's safe or not. Is some bank regulating it? Where is it lying?
Fair enough. Very good questions again. So there are 3 such companies in India. There is MMTC, as you said. There is Safe Gold, and there is Augmont. We have partnered with Augmont for our digital gold product that you can buy on Kuvera. The gold is stored in vaults, in lockers, and the security company that does all the gold security is Brinks. They're the leaders in all kind of, even money. Like if you look at ATMs, all the trucks will have that Brinks. So. And there's always a custodian. So there's always a bank that acts as a custodian to ensure that when Augmont says, hey, I've bought 10 grams of gold on your behalf and kept it in a locker, there's a third party that verifies it. Think of it like the RTA setup in mutual funds. CAMS and Carvi basically say that, yes, Surabhi, you own 100 units of this fund, and they are the third-party verifier. So, so a similar system exists here. It's not like this is done in pure isolation of best practices on how a physical asset should be converted to a digital asset. So safety is taken care of.
Okay. So now let's come to how to transact on this. If I'm buying a quantity, and let's say if I decide to put in 50,000 and buy digital gold worth 50,000 today, will I get the entire quantity? Is there going to be a charge, a cost? Who pays where? Where's the money chain?
Sure. Whenever you buy a commodity, whether you're buying it as physical gold, whether you're buying it as digital gold, or you're buying a mutual fund or ETF, that is the mutual fund and ETF is buying the gold for you, you have to pay the bid ask. It's a commodity market. There is a bid ask. When you buy at the bid price. When you sell at the sell price. Which is true for even stocks, which is true for every digital asset, right? When you buy digital gold, it's exactly the same as buying physical gold, so you have to pay GST on top of it.
All right.
But that's pretty much it. There are
no other charges?
No storage charges, nothing.
Nothing else?
Nothing else.
Now, my next question is going to be liquidity. So, we Indians have been very comfortable with physical gold, if not jewelry, even if it's in the form of, bars or coins, because you can go and quickly, sell it in the market and get your money.
Right.
Is that kind of liquidity available in this market?
It is. So it's a digital market though. So it's a T+1 settlement. You can buy as little as 1 rupee of gold. So there is that divisibility.
So there's no minimum investment threshold.
You can do 50 rupees SIP. You can do 1,000 10,000 rupees SIP, you can do 10,000, 1 gram SIP, whatever you want to, however you want to invest. And whenever you sell, you place a sell order on the app, and next day the money hits your bank account.
How liquid is the market? Because it'll be very important.
Very liquid. The liquidity is driven by the global market. See, at the end of the day, gold is a commodities market. This is just a way of making it easier for investors to invest in it, making it divisible so you can buy in really small chunks, bringing in the liquidity, bringing in the safety, and also taking out some of the expense ratios that you have to pay if you go through the mutual fund or the ETF route. At the end of the day, it is the commodities market. The liquidity is driven by the global demand for gold, which, I mean, Indians bought close to 750 tons of gold. Yeah. There is a lot of liquidity. Liquidity is not a concern.
We like our gold. Okay, I'm going to quickly wrap out by asking you exactly that. This sounds, a great tool for someone who wants to transact more frequently in gold, maybe sort of trade in and out. But for someone who's looking to buy and hold and invest, how would you compare some of the options? There are gold bonds, there are gold funds, and then there's digital gold. Purely in terms of cost and efficiency and effectiveness, what works for a retail investor?
So we have a bit of a different view. If you want to hold for a longer time as a asset allocation play, as a portfolio hedge play, then digital gold is better because with what happens with mutual fund and ETFs is you don't pay the GST. You save on the GST, by the way, on a mutual fund and on ETFs.
Okay.
But you pay that expense ratio year over year over year over year.
That's true.
Here you basically pay that 3%. So the longer you hold it, the more expense ratios you will pay in a mutual fund or an ETF.
The 3% you mentioned?
It's only once.
Just the GST you're talking about?
The GST is only once.
No other hidden charges?
No other hidden charges, no other kind of storage charges. So effectively what happens is if you're buying for 3 months, then probably a gold ETF is a better option.
Okay.
But if you're thinking of gold seriously and you want to, and your view is that, you know what, I don't want to time my gold. When markets start going down, I'll buy gold. That's very hard to do. But if you're thinking of it as an asset allocation play, then digital gold is better. SGBs, sovereign gold bonds, of course they are good. They have liquidity issues. You can't sell before.
That's true.
And the secondary market always trades at a significant discount.
They give you that additional interest, but I take your point on liquidity.
So SGBs are not a bad instrument at all. 2.5% interest, you can't beat that, to be very honest. But the tranches open periodically, and there is a secondary market discount. So if you have to sell before 8 years, you have to take a lower price, and sometimes it's as low as 7 to 8% lower than the spot gold price.
Than the actual market price. Okay, well there you go. I mean, there are different options. Depends on what you're looking to do with your investment or whether you're looking to trade in and out. That was very helpful, Gaurav. Thank you very much for joining in and explaining digital gold to us.
Thank you so much.